Good morning, trading world. It is December 1st, 2022, and this is my pre-market outlook and technical analysis for day trading the markets. After yesterday's rally, I think it's time for a reality check. I think the rally yesterday plus a fade today on the first seals the fate of one of the biggest declines coming in maybe 50 years. This decline won't be seen until January or February of 2023. Let's take a look at things that are getting swept under the rug or out of the view of the mainstream. First, the U.S. government is mad at China because of how they shield certain narratives and agendas from the people. However, the U.S. does the same thing. The GDP and PCE indicators were big news yesterday. The data came in bad, and these, or at least the PCE, is something the Fed explicitly uses in its rate determinations. Did anyone see one article or mention of these two data points in mainstream media at all yesterday? Let me answer that for you. No, you didn't. There's a culmination of big problems about to hit the fan that no one is talking about now. The first problem is that it takes about 12 to 18 months for rate hikes to start to take effect in the real world. So this means that we are just now about to feel the effects of the first rate hike the Fed has made. And we have how many more rate hikes since the first, waiting for the effects to come down the pike in 12 to 18 months and hit us over the head? A lot. And we are not even done. I talked about the effect of this and exposing some companies over a year ago in several pre-market outlooks. It's too much to kind of go back and dive into, but it's in the archive somewhere a year ago. The second problem is the PCE report. No one mentioned, or it was swept under the rug. It came in hot, meaning inflation is not cooling, but is rising again. So the Fed, with all these rate hikes to fight inflation, has thrown almost everything but the kitchen sink at solving inflation, and the PCE is saying it didn't work. Now the third problem that no one is talking about is we are approaching or in an illiquid market. Go check out your favorite company's quick ratio. I think I'll have to save that to dive into deeper in another pre-market. But that goes a long way to looking at how insolvent or illiquid a company is, and you're going to have to do that company by company, and just kind of put it together for the entire market. But there's a big problem brewing here. I'm not going to draw it out too much longer. Like I said, I may come back to that and do an entire pre-market on that subject in itself. Let's get to the key levels to watch for. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at 407 to 408, queen resistance 409 to 410, and then king resistance 411 all the way up to the 416 area. On the support side, we have Our jack support at 406 to the 405 area. Queen support 404 to the 402 area. And then king support 401 to the 397 area. The shaded areas are areas of supply and demand that are going to be hard to get through. This is where we're going to find resistance today and make it maybe hard, or an area where we're going to reverse somewhere in here at some point today. The main thesis for today is bearish, closing below the 407.68 with a projected target low of between 407 and 401. The alternate thesis is bullish, closing above the 407.68 with a projected target high of between 408 and 414. The current major channel we're in is 397 all the way up to 416. The major channel above that is 416 up to 425. We have harmony between the technical side, which is bearish, and the quant side, which is bearish. We still have gaps in order flow below us. Now, normally this would be enough for me to take a short here, but it's the first of the month, so this could easily overpower technicals and give us a more explosive alternate thesis event. I expect a pullback today, but it could be quick and only take us back to 406 or 404 during the trading day, and maybe lower after hours. But this could lead to another reload of bullish activity into Friday. I want to talk a little bit more about the way I see today playing out, because usually when I have harmony between the technical side and the quant side, it's usually great odds, better than 80%, that we close below that that level, or that previous close. But with all the new money out there, I spoke about it yesterday about the new fund flows. As much as this says we should have a bearish day today, that new fund flows could ruin it today. And even we could see impressive overbought signals on short-term time frames today. Be careful, because it could be an illusion, and we could still come down just a bit, enough out of overbought short-term on these short-term time frames, almost like a head fake. It seemed like we're going down and then shoot back up and go take us up even further. So we have to be careful with that today. And usually when signals are this strong, I usually feel good about having a rounded reversal day type structure, but there's something that could happen that we could still have a rounded reversal day type structure, but I've seen in recent times, instead of us having that breakdown during the lunchtime period or right after the lunchtime period, we could actually string this along, and it may all happen right, or going into, or right at the close. And that would kind of align with the time of month that we're at, to where this happens at the close, and then this pullback happens overnight, and then pre-market in the morning, you don't really get a chance to take advantage of things, because the algorithms kind of hijack the market, and we're back up coming into the cash open, or going up, or to the point where whatever pullback you thought you had overnight, it disappears very quickly coming into the open or right after the open. So be very careful with that. That gets us into the scenarios of the day. Give me a moment to bring those up. Due to time constraints, I'm going to put the scenarios in the write-up, but I'm not going to have time to go over it in the video because I still got to bring up a platform and get ready for the open myself. But these scenarios are in the write-up below. As always, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have in each position, and we manage that risk in accordance to our account size. I hope this helps. Please be careful, and wishing you a positive trading day. Let's make it a great one.